In its April review of the monetary policy, the Reserve Bank of India introduced the Standing Deposit Facility or SDF to absorb excess liquidity without any collateral and increase interest rates in the money markets. So, what is this instrument and how will it work? At present, there is a liquidity overhang to the tune of 8 trillion rupees in the system. This will be sucked out gradually in line with the RBI's plan to withdraw from the accommodative stance that has been in force since the start of the COVID-19 pandemic 2 years ago. Now, as inflation increasingly becomes a concern with geopolitical tensions causing a surge in prices of commodities like crude oil, the central bank has turned its focus on its primary mandate, controlling inflation. 8 years ago, a committee headed by the then RBI Deputy Governor Urjit Patel had recommended SDF as an instrument to drain out liquidity. The Patel Committee had, among other things, recommended an inflation targeting framework for the monetary policy. This later became a law after being voted by Parliament. After the introduction of the SDF, banks will now park their money with the RBI at the SDF rate, and for that, they will not get government securities as collateral. Since the SDF rate is 3.75%, the policy repo rate 4% and the MSF rate 4.25%, the width of the liquidity adjustment facility or LAF corridor stands restored to the pre-pandemic level of 50 basis points. The policy corridor had been widened to 90 basis points during the pandemic. The introduction of the SDF also makes reverse repo rate defunct. Since SDF is the floor rate, the effective interest rate will be 3.75%. The reverse repo rate is at 3.35%. So the effective interest rate rises by 40 basis points. The SDF at 3.75% also marks the beginning of monetary policy normalization according to central bank watchers. The RBI also guided that the focus going ahead would be on a withdrawal from the accommodative stance. Under the accommodative stance, the RBI either lowers or holds rates. It does not increase interest rates.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.